QuickBooks Online 2021 adjusting entry related to depreciation in QuickBooks. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're going to start off by duplicating our tabs up top and running a few reports. So we're going to go up top, duplicating the tab by right-clicking on it so that we can then duplicate. Then we're going to duplicate that process by right-clicking and duplicating again. And then we're going to duplicate that duplicated process to right-click on the tab and duplicate again. Then we're going to be creating the trial balance here, followed by the profit and loss or income statement, and then the balance sheet. Going to the reports down below on the left-hand side, then we're going to be typing in the good old trusty trial balance, the good old TB to start off with, range change in it, ending point being 022821, and then run that report. And let's close up the hamburger, hold down control, scroll up just a bit to get to that 125. That's where I like to be. And then we're going to go to the next tab to the left, down to the reports on the left. And this time we're going to be opening up the P&L, the profit and loss, the income statement, range change up top, ending at 022821, and run it. Close the burger. And then go to the left of that one. Next tab on over. Go to the reports down below. This is the one where we want the balance sheet. The good old balance sheet here. Ranging the changing up top at 022821. And then running that report. Closing up the hamburger. We're now looking at the adjusting entry related to the accumulated depreciation. And note, we went over kind of the difficulties in the prior presentation in terms of how do we want to group the accumulated depreciation, who's going to calculate the accumulated depreciation, are we talking about accumulated depreciation on a book basis or a tax basis, do we want to record it differently on our books versus the tax, do we want to do this on a yearly basis, or do we want to do it on a monthly basis? So we discussed some of those options and those questions in the prior presentation. Once you actually know what the depreciation is per category, then it's pretty straightforward to then just straight calculate it and enter the adjusting entry. Just note that, the depreciation expense is one of the adjusting entries that you may not be able to do as easily without the help and assistance from like the tax preparer. In other words, if you enter the depreciation entries, it's not going to lessen the amount of work possibly that needs to be done by the tax preparer, because they still need to enter the data related to the purchases and whatnot so that they can run the depreciation calculations on a tax basis. And therefore, it might be easier just to rely on the tax software and possibly the tax preparer to help calculate and record the depreciation tables, which then will be used to enter the information into the system. So we looked at the depreciation tables last time. This is our book basis depreciation table where we laid out the detail of the purchases that we have. Once we have this, then we can just enter the adjusting entry either monthly or yearly with just a normal journal entry adjusting entry. Remember that you may want to record this on a book basis or a tax basis, depending on what your needs may be. We're going to record it basically over here, thinking about a book basis, basically using straight line depreciation for our depreciable assets. So we've done this in Excel already, so we have the information that we input into Excel here. We're just going to mirror that now as we enter it into our QuickBooks system. So let's go on back on over to the QuickBooks. Also, just realize that when we're putting our categories together, you probably want to line up your categories, something like the fixed assets, the furniture and the equipment, the automobiles, to the same categories that would be on the depreciation schedule categories, possibly in the tax software. So use the same grouping, most likely, will be the easiest thing to do. And then you got the question of, do you want to have separate accumulated depreciation per section so that you can look at the book value per section? For example, book value for the furniture and equipment here. Or do you just want to have one accumulated depreciation account, which would be the easiest thing to do, and just calculate all depreciation kind of as if they're grouped together in one account. That way you don't have the ability to see the book value per section, per category, but it's easier and you can see the book value for the entire group. What we did here is we're going to set up our two categories that we have, fixed assets, under fixed assets, equipment and furniture and equipment, and then give us the sub-account, the related account, which is going to be the accumulated depreciation tied to each of them. We don't see one here for the equipment because this is the first period in which we're going to record the accumulated depreciation. And then we have it down here for the furniture where you could see this would be like the book value. I can condense it. And then if I hit the old drop down, we've got the accumulated depreciation then underneath it. So we already have our information over here. Remember that these schedules, though, are going to be on a yearly basis, typically, if they're coming from your tax preparer. If you're going to record them monthly, then you're going to have to break these down to monthly totals. We're going to be recording the depreciation because we didn't do any calculation for the first month. We're going to record this for 2 months time period as of February. So note that we should probably break it down for month 1 and do an adjusting entry in January and then February, but we're just making everything correct as of the 2-month ended in February in this case. So that means that we had our calculation here where we took the depreciation for the current period, 14001 divided by 12 months. That would be a monthly times 2. That's going to be their 2333.5 for that category. And then on the machinery and equipment, we got the total 833 divided by 12 times 2. It's going to give us our 138. So notice we're not calculating the depreciation per thing that we bought, even though that is done for us and we need that information on the depreciation schedule. But oftentimes that could be done by the tax preparer, who can then, needs to enter that information to do the depreciation schedules for taxes, and therefore can give us this information so we can use it to as the basis for our calculation. So let's go back on over to then QuickBooks. I'm going to go to the first tab. Let's start off going down to the accounting tab down below, and then I'm going to close up the hamburger, hold control, scroll down to like 110. And then if I scroll on down here, notice our setup. We've got the equipment account as a fixed asset type of account, and then we set up an accumulated depreciation. I abbreviated it as ACC Depre, so it's not this huge long line item, and then equipment next to it. You notice that you don't need to really repeat equipment. If you would rather just have the full name accumulated depreciation as a sub-account of equipment, you can do so, but I like to have the name in there so that when I record it, I could see it. But it's gonna show on the report as a subcategory here, so you don't really need. It's kind of redundant, some might say, to put the equipment there. We did the same for the furniture. We got the furniture and then the subcategory of the accumulated depreciation right underneath it. So now we're going to record our journal entries, and it's a straightforward journal entry to record. We can do so by going to the new button up top and go into journal entry. But because they only have basically 2 accounts affected, it might be easier to just use our registers. So we want to use the register, which will be the accumulated depreciation account, because it's a balance sheet account, as opposed to the expense account, which would be the depreciation expense type of accounts down below. So we'll do that. Before we do, however, notice that we don't have any expense account for depreciation expense down here. We don't have one set up yet. Now we have the same kind of thing, even though we broke out these two categories up top as 2 separate accumulated depreciations. We could still just record them to one depreciation expense account, which could be the easiest thing to do, which is group it all into one depreciation expense account. But again, you might want 2 depreciation expense accounts so that you can break it out by category, the depreciation expense related to the equipment and related to the furniture in our case. So I'm going to do that. I'm going to make 2 depreciation expense accounts. To do that, I would like to have a depreciation expense account down here as the parent account, and then show the sub accounts so that I have the ability to show it just as one line item or as the 2 line items in detail. So let's practice that. I'm gonna add 3 accounts here, 1 being the parent, 2 being the sub accounts of it. So I'm gonna say let's add a new account. I'm gonna call this an expense type of account, and we're gonna say this is gonna be depreciation. So do they have a depreciation account here? I'm just gonna call it other expense. Let's call it other business expense. So let's call it depreciation. Depreciation. If I misspell any of this, I apologize in advance. And then I'll save it and close it. And so there's that. That's our parent account. Let's make another one. So I'm going to make another one, and this is going to be an expense type of account. And this is going to be other. I'm going to say other again, other business. And then this is I'm going to call it Depre. I'll try to abbreviate it this time because it's going to be a sub account. And then I'm going to say equipment. And that's going to be a sub account of the depreciation account we set up. depreciation. So now that's going to be underneath it. So I can have the detail if we want it in that format. And so it says not a valid name. I can't have a colon in it. No colon. All right. Whatever. Depreciation. I'm going to put a dash then. Dash. Is that all right? Is that okay? QuickBooks. And so then if I scroll down, so there we have the sub account. Now let's try it again. I'm going to go up top and say new. And then this is going to be an expense type of account. And then I'll make it an other, again, other expense. And this is going to be depre dash furniture. And then this is going to be a sub account of the depreciation account as well. So we'll save it, close it. Very nice. Hermosa. Looks good. And so there, what happened to it? It should be down here. So there it is. So there they are. Okay, so now we can record our journal entry. So let's do it. We're going to go up top and do it in a register type of format. Let's do the equipment first. So I'm going to go into the register for the accumulated depreciation. And we're going to be adding the item here. Now this one's a little confusing. I'm going to do it with a journal entry, but because it's a contra asset account, this is where the plus and minus isn't as good as debits and credits because it's a contra asset. So is that an increase? Because an increase would be an increase to the credit account. So I would think personally it should be an increase, but I think QuickBooks sees it as a decrease because even though the account's going up, it's decreasing assets because it's a contra asset type of account. So if you go the wrong way on it, then you just go back in there and fix it. It's not a big deal, but it's a little confusing. That's why debits and credits are better, but whatever. And so we're going to say that this is going to be AJE6. So let's call it AJE6. And this is going to be then, I'll just call it AJE6 here too. And we're going to have I think it's a decrease. And we'll pick up the number of 138.83. So we're going to say 138.83. Other side is depre for the equipment. There it is. And let's go ahead and save it and close it. See if we went the right way with it by going back to our chart of accounts. So there we have it. So there we have it here. Let's go to our balance sheet now and check it out. I'm going to hold down Control, scroll up just a bit to get to that 125, freshen up the report. So we're working with fresh stuff. And then if I go down, we're going to say there's the 5,000 and there's the 135 underneath it. So we went the right way because it decreased it. Like if this was increasing the balance here, then that's doing the opposite of what we should be doing. It's because the accumulated depreciation should be a contra asset account. So notice if I minimize this screen, now we've got the fixed assets. We could see in one line item because that's the type of accounts we're using. If I maximize this, we can minimize these items and I could say this is the book value, say, of the equipment account. And if I want to see then the detail of it, I could say, well, we bought it for 5,000 and then this was the accumulated depreciation related to it, decreasing it to give us the book value of the 486117. So you can see you can give us some more detail. This is one way that you could set it up, which is kind of nice. And then if I go then to the income statement, the P&L, and I freshen that report up, running it, going down, then we have down here in the depreciation. Now I got the depreciation category drop down, parent account. That's why I have a drop down, because there's a parent, and I can collapse it and say, hey, look, that's just depreciation. And then I can give us depreciation per category if you want to have that. Notice how much more space it takes to add these sub accounts. So they have pros, they have cons to add a bunch of sub accounts, but they can be nice. And if I want to just not show the detail, and I like the detail personally, but you don't like the detail, then we can collapse the sub accounts, and then we just have the depreciation expense here, and we don't have them. So the sub accounts can be nice. So then we're going to go back on over and record the other one. Let's do the other one. This time this was for the furniture. Now furniture. So I'm going to go to the furniture account. Once again, I'm in the accounting tab. We're in the chart of accounts, closing up the hamburger. We're going to go then, I'm scrolling down to 110. Furniture, accumulated depreciation. Probably should have started with this one because I could see that it's a negative here, so I could see which way we should be going. So I'm going to say journal entry. We need another one. Journal entry as of the cutoff 02/28/21. And this is going to be AJE7. So we'll keep it at AJE7 here. And then this is going to be AJE7. It's actually, this was kind of, I'm going to make it 6.5, which is confusing, but now let's keep it at AJE7. AJE7, 6.5. That's silly. But on our Excel worksheet, I need to add another one here. AJE7. That's how we'll do it. Okay, so then we're going to say this is going to be a decrease, and this is going to be the 2333.50. So we'll say this is decrease 2333.50, and the other side's going to go to depreciation of equipment, of furniture. This one, the subcategory. And I think that's right, so I'm going to save it and close it. And I can see it's going the right way. There's the 9833.5, which I think matches what we have here. So 9833.5, so that looks correct so far to me. Let's go on over to our reports here. Balance sheet, let's freshen it up so we have a fresh report. And hold down Control, scroll up just a bit. So now we can say, hey, here's the total fixed assets. And that's, the book value. And then I can expand that and say, and here's like my equipment and the furniture. And if you want to know the detail on the furniture, we can hit the old drop down here and say we bought it for $98,000, accumulated depreciation, the 9833.5 to give us the book value of the 88,166.50. And then we can go to the income statement over here and freshen it up, run it so it's fresh, and then scroll down and we could say that we have the depreciation with one line item. This is total depreciation for the time period thus far. And then open it up and the categories are for the equipment and the furniture and fixture. That's how we got to that total. And so there we have that. Let's compare it on out to our Excel sheet over here. Back to the balance sheet. Let's expand everything and say balance sheet. And let's go back up and say we should have 5,000 in equipment. So 5,000 in equipment ties out 5,000. Then we've got the 138.83 accumulated depreciation, 138.83. If I sum those up, that comes out to the 4861.17, which I can highlight these two to check it here, 4861.17. And then we should have 98,000 in the furniture, 98,000 in the furniture, accumulated depreciation, 9833.50. So we got the 9833.50, and then if I combine those, we're at the 88,166.50 book value, which is the cost minus the accumulated 88,166.50 book value. Is that the same number? I can't remember. Yeah, it totally was. I knew it was. And then if we go to the income statement, then we just saw the two down here on the income statement, but we got the 183.83 and the 2333.5. So if I go down to the income statement, this one looks right. And then if I sum them up, we got the 2472.33. And then if I collapse this one, we got the 2472.33. Back on down to the bottom, net income now calculated at the 6960.85. And that then if I go over here, 6960.85 for the income thus far. So everything's tying out. Looks perfect. Let's go back on over and just check one more. We got the good old trial balance, and let's freshen that one up. This is where we're standing at this point in time, so you could check it out here. I'll also print it out so you can look at it as opposed to on our time, on your own time.